What's up, everyone? It's Caddy with Money Investing. We've got a big week on our hands because we do have the GDP numbers coming out. We've also got inflation numbers coming out, the Fed's preferred measure of inflation coming out, which is going to be the PCE. I'm going to go over all of that as well as the earnings that are also being released, and then talk a little bit about the markets, S&P 500, the NASDAQ, the bond market, volatility, and of course, individual sectors as well. So hope you guys enjoyed this video. Find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. And the link to our Discord and Patreon is going to be down below. There is a 16% annual discount that is available till the end of this month. We'd love to have you on board. We've got a little bit over 3,700 members now. And again, you can access all the buy and sell alerts, options alerts, trade ideas, all the other research, analysis. The benefits are unlimited with the community. So link's going to be down below if you're interested in joining us. So let's just dive right into it. The first things I'm going to break down is going to be the earnings. So this right here is going to be the earnings calendar. We do have Carnival reporting. We do have BioNTech reporting. We do have a few companies left that I'm particularly interested in, but that's about it. We're kind of ending or coming towards the end of the earnings season. So one big company for me next week is going to be Walgreens. Definitely will be paying attention to that on Tuesday morning. And then we've also got Lululemon. We've got Micron. We've got Dave & Buster's, especially Micron and Lululemon. Really interested in those two companies, especially Lululemon. I mean, I've been trying to own this stock for a super long time, but this just never comes down to the valuation that I'm comfortable paying for this company. Another really good software company to look for on Wednesday is going to be Paychex. That's another, IT/software company, and that actually is profitable. I've done an analysis on this company before. And then finally, we got RH, and that pretty much is going to wrap up the week. And that's about it. That's the only companies that I'm particularly interested in for next week. Now, talking about the actual economics calendar. Now, we do have Michael Barr talking twice next week. Once on Tuesday, that's going to be at 10 a.m. Eastern. And then on Wednesday at 10 a.m. Eastern as well. He's the one that's actually leading that investigation with Silicon Valley Bank and what went wrong. So that's going to be very important for the market because anything that he says is or could be market moving going into next week. Now, in terms of some of the other numbers, we do have the wholesale inventories coming out. We've got retail inventories coming out, international trade in goods and services. We got FHFA house price index, and we got consumer confidence. And then on Wednesday, we got pending home sales index. And then finally on Thursday, March 30th, we got the GDP numbers. This is going to be the third and the final estimate for Q4 2022. So GDP numbers and jobless claims, of course, come out every Thursday. Corporate profits come out. And don't forget, the Fed's balance sheet also comes out every Thursday. So that's going to be due after the markets close at 4:30 p.m. And then finally, the big day is going to be Friday, March 31st. Personal income and outlays. We got Chicago PMI and consumer sentiment. All of that is going to be scheduled for that day at around 8:30 a.m. to as far as 9:45 a.m. and 10 a.m. Eastern as well. So in terms of GDP, the consensus is 2.7%. So that is going to be that annual rate on a quarter-over-quarter basis. And then when you look at the jobless claims, expected at 195,000, is a slight increase from the prior week. And then if you go over to personal income and outlays, so this is going to be the inflation numbers, this is inflation expectations for next week. The year-over-year PCE number, personal consumption expenditure price index, year-over-year is expected at 5.1%. And that's going to be slightly down from 5.4%, but is expected to increase by 0.4% on a month-over-month basis. And personal income is expected to increase by 0.3%, and personal consumption expenditure month-over-month at 0.2% as well. And core PC, if you strip out food and energy, expected to increase 0.4% and stay steady at 4.7%. So this is the number that is perhaps the most important to the Fed right here. That's the core PCE. And they want to see this number pretty much fall down to 2%. And right now we're nowhere near close, and we're still pretty elevated. And this upcoming read is expected to not really move all that much and pretty much stay steady at 4.7%. So again, this is the Fed's preferred measure of inflation. So if it actually shows us any big upside surprises, if we actually see acceleration to the upside, that's not going to be well received by the market because the market's still pricing in about 8 cuts from the federal funds rate over the next 12 to 14 months, which is actually quite a lot. But if you do see inflation, rolling over, it continues to come down, shows us a lot of disinflation, that is going to be a pretty good positive catalyst for the market going into next week, and could be, accelerating us to the upside a little bit. S&P getting up to 4,100, NASDAQ back up to 12K. We'll talk about some of the technicals in just a minute. So consumer sentiment steady at 63.4. Prime number was 63.4 as well, so that's going to be that. And now heading over to the S&P 500. So last week, we were up 1.39%, despite what Jerome Powell said, despite him kind of ruling out any rate cuts for 2023. The markets were still steady. They were still strong. They still managed to close green. And the NASDAQ was also obviously pushing higher. It was up a little bit over 1.66%. Now, S&P 500, I'm watching this level right here. That's going to be 4,100. This is a very, very important level of resistance. We have literally gotten rejected at that level going back as far as November of last year. And then 4,100 to call it 4,200, pretty much that range seems to be very strong for the S&P 500. There seems to be a lot of bears setting up camp around these levels for the S&P because we have gotten rejected here not once, so once here, twice, 3 times, and 4 times. 4 times S&P has gotten up to 4,100, 41, 4,200, and we have seen rejection at that level. So that is going to be the most important level to watch for the S&P. If you get a successful breakout, hey, I mean, there's possibility we can even get up to 4,300. But, you know, with the recession looming, with a lot of other economic data points and uncertainties around the macros and everything that I have learned and researched, I find it difficult for the markets to really break out above 44, 4,500, considering the valuations and the potential for earnings to also drop in the future. But that is going to be that resistance, right? 41 to 4,200. Support level is going to stay put at 37.75. So this right here, very, very important level to watch. That's exactly where we validated our support back in December. And of course, not to mention our October lows at close to 3,500 as well. Talking about the NASDAQ, almost an identical story. We do have a resistance sitting at 12,200. So this right here, very, very important resistance. We have gone rejected at that level quite a few times, 12,000 to as far as 13,200. So that 1,000 point range, couple resistance levels there. And of course, support level is going to stay put at this lower high. That's going to be in line with this previous resistance all the way down to its October lows, sitting roughly at around 10,200. Now, another few charts that I want to break down is some of these. So what you'll notice is that from a short-term perspective, you know, this chart definitely does suggest some potential upside. And the reason is because it has already come down from 81%. This is percentage of stocks that are trading above or below their 50-day moving average. So percentage of stocks trading above their 50-day moving average, right now 21%. So in other words, you know, if you round down things, 80% stocks are still trading below their 50-day moving average. So once again, we've come down to some of these lower levels, closer to 20, 25, 15%. So a short-term rally from these levels, considering how oversold this indicator is not unlikely. Something that we could expect on a more short-term to intermediate basis. But if you look at some of the other charts, such as this one, again, we've come down to a more short-term sort of support level where we have previously bounced off of. This is S&P 500 stocks trading above their 200-day moving average. Now we've got 60% stocks trading below their 200 SMA. So if you do see a more prolonged sell-off or something that, you know, lasts a little bit longer, if you see some more weakness, it is possible that we once again come down to, you know, single digits, maybe double digits, low double digits, teens. Some of those levels are possible for the S&P 500. And this is exactly where we were back in September, October, before the rally pretty much began. So, you know, things are still pretty uncertain for me personally. Again, I've already mentioned where my thesis is. I do think that markets are going to be very much macro driven in 2023. We're kind of looking forward to where inflation, interest rates, everything pretty much goes throughout this year. And if there are any possibilities of a recession looming at the end of this year, early next year, I do believe that earnings are going to drop, consumer spendings are going to pull back, and that's really going to put an impact on where the S&P 500 trades in the future. And I do think there could be more potential downside considering that the recession is still yet to come. But of course, a short-term rally, a very small, you know, oversold rally or technical rally is still on the table, something that we could expect from the markets moving forward. So hope you guys enjoyed this video, found it helpful. Again, if you did, make sure that you drop a like, subscribe to the channel. The link to our Discord and Patreon is going to be down below if you're interested in joining us. As always, happy investing. I'll see you all in the next video.